So imagine turning a $10,000 investment into nearly $60,000 in just 3 weeks.
Which is, I mean, that sounds totally absurd on the surface.
Right. Completely absurd. And we're not talking about like predicting the next president of the United States here.
No, not at all.
And it's not buying some obscure tech stock either. We're talking about literally just betting that the Secretary of State would have a highly publicized viral meeting with the Pope.
Yeah, exactly. It's wild. But I mean, we are looking at a financial landscape where the whole wet finger in the wind of traditional political polling, that's been totally replaced.
Replaced by what exactly?
By this ruthless, hypersensitive seismograph. Like every whisper, every scheduled press briefing, every society wedding is instantly quantified. It's traded and priced into digital contracts in real time.
Which brings us to today's deep dive. We are dissecting a fascinating market analysis from June 19th, 2026. It's titled, Leveraging the 2028 Republican Presidential Primary Market.
A very telling title.
Right. And our mission for you listening today is to decode the hidden mechanics of this upcoming race. We are bypassing the pundits, we're skipping the focus groups entirely to look at how serious capital is moving right now on platforms like Polymarket and Predmart.
And we should probably set some ground rules before we get too deep into this.
Oh, absolutely. I'm glad you brought that up.
Yeah.
I want to pause and make something crystal clear to you, the listener, because we're diving into a highly political topic featuring, figures from the right wing. Neither of us here are taking any political sides.
None whatsoever.
We are not endorsing the viewpoints of these candidates, and we're not endorsing the source text. We don't care about the politics, and then honestly, neither do the markets.
Exactly. To a leveraged trader, these politicians aren't people or ideologies. They are simply highly volatile financial assets. That's it.
Yep. So this deep dive is strictly an impartial, analytical look at how financial markets are pricing political outcomes. We're just here to analyze the math, the mechanics, and the psychology behind these trades.
Right. And to understand that psychology, you really have to look at the board as it stands right now.
Which is halfway through 2026.
Yes.
Yeah.
The Trump administration is right in the middle of its second term. The midterm elections are looming in November. And the official 2028 campaign cycle hasn't even officially started yet.
But millions of dollars are already shifting hands.
Exactly. Millions. All trying to predict the eventual Republican nominee. And the most glaring signal in the entire market is sitting right at the top of the ticket.
With Vice President J.D. Vance.
Right. The data shows Vance trading at a 38.05% chance to win the nomination.
So for you listening on a prediction market, that means you can buy a contract on Vance for roughly 38 cents.
Yep. And if he wins the nomination in 2028, that contract resolves to $1.
So you make a solid profit.
Right. But if he loses, it goes to zero. You lose everything. Now, 38 cents makes him the clear front runner, especially since he won the CPAC 2026 straw poll back in March.
Which sounds great, but the analysis points out a massive structural flaw in his current price, doesn't it?
It really does. The trend line is actively working against him right now.
How so?
Well, according to an April YouGov poll, Vance's support among the base actually dropped roughly 5 points since January.
Wow, 5 points?
Yeah. And, I mean, being the sitting vice president obviously gives him that presumptive heir status. But in the trading world, having a presumptive status without aggressive momentum, that's a huge vulnerability.
Because rivals are circling.
Exactly. They are actively looking for weaknesses. And the market is pricing in the fact that Vance hasn't locked the field down.
Okay, let's unpack this a bit. Because a major catalyst for that vulnerability actually came from former President Trump himself.
Yeah, that was a huge moment.
During a CBS Sunday Morning report, Trump was asked about Vance running in 2028. And Trump said he is, quote, very supportive of whatever Vance decides to do.
Which to a casual viewer sounds great.
Right. It sounds like a standard glowing endorsement. The boss has his back. But a leverage trader hears those words and what? They immediately start selling off Vance contract.
They absolutely do, because the phrasing is everything here.
Break that down for us.
Okay, so Trump endorsed Vance's autonomy. He did not endorse his succession.
Just
saying, I support whatever he decides, leaves the door completely open for an alternative nominee. It signals to the market that the succession plan is not carved in stone.
And markets hate that.
Markets fundamentally despise uncertainty. That single sentence introduced a massive layer of doubt regarding who the establishment will ultimately back.
Let me offer an analogy for the listener. It's like putting down a massive down payment on a brand new car, paying a premium price, but the manufacturer is actively going on television, teasing that they might release a much better model next month.
Yes.
And they fully support you buying either one. You wouldn't lock up your capital in that first car.
You'd wait and see.
At least.
And the timing makes Vance's position even more precarious for a trader, because that same CBS report noted that a final decision from Vance and his wife Usha isn't expected until late 2026.
So well after the November midterms.
Exactly. So entering a leveraged long position on Vance today means you are borrowing money from a platform to bet that his 38-cent contract will go up.
But nothing is happening.
Right. You're facing months of dead air. He isn't fully committing, and he isn't dropping out.
So without a definitive catalyst to drive his price upward, you're just bleeding capital on borrowing fees.
Yep. While his poll numbers slowly erode, in trading terms, you are catching a falling knife.
Wow. Okay, so if capital is flowing away from the frontrunner because of that delayed decision, that money has to go somewhere.
It always does. It searches for momentum.
And that creates the perfect bridge to Secretary of State Marco Rubio. He was the biggest mover in the market, right?
Oh, massive. He engineered a fundamental repricing of his own stock. He surged from 11 cents a share all the way to 23.85 cents on Polymarket.
That's a huge jump.
And his CPAC straw poll numbers mirrored that explosion, too. He went from a mere 3% in 2025 to 35% in 2026.
But that kind of movement doesn't just happen organically.
No. It's the result of a systematic buildup of political capital. Traders watched a very specific sequence of events unfold with Rubio.
Like the Pope meeting.
Exactly. First, there was that viral meeting on May 5th with Pope Leo XIV that provided massive positive global media coverage.
Right.
Then, Rubio took a highly visible role in complex foreign policy operations in Venezuela and those military strikes in Iran.
So he's building this aggressive, active foreign policy portfolio.
A portfolio that Vance, who is constrained by the traditional duties of the vice presidency, simply cannot replicate right now.
Then you layer on the domestic maneuvers. Rubio fills in at a White House press briefing. He releases a highly polished, campaign-style vision video.
The video is a big signal.
And then AOL breaks a report that major GOP donors are quietly brainstorming ways to boost his ticket. Plus, Trump even floated the idea of a Vance-Rubio dream team at a May White House event.
All of those are data points. The traders see all these isolated events and recognize the pattern of a shadow campaign.
Here's where it gets really interesting, though. I want to push you on the math here. Because moving from 11 cents to 23 cents on a contract, how does that actually matter so much to a trader?
Well, this is where the mechanics of leverage trading transform basic political analysis into exponential wealth.
Okay, walk us through it.
Moving from 11 cents to 23.85 cents is a 116% return on the underlying asset.
Which is pretty great on its own.
In traditional finance, doubling your money in a few weeks is a monumental win. But platforms like Predmart allow traders to use up to 5x margin.
Okay, let's break that math down so you listening can really visualize the stakes here. 5 times margin means if you have $10,000 of your own capital, the platform essentially lends you $40,000 more.
Exactly. So now you place a $50,000 bet on Rubio at 11 cents.
And when the Pope Leo meeting happens and the price spikes to 23 cents?
Your entire $50,000 position basically doubles. You pay back the $40,000 you borrowed, but you keep all the amplified gains.
Wow. So that 116% increase turns into a return approaching 600% on your original 10 grand.
You capture nearly $60,000 in pure profit. What's fascinating here is that the underlying lesson for navigating prediction markets is that you do not need to successfully predict the ultimate president.
Wait, really?
No. The payout doesn't come from waiting until Inauguration Day. The payout comes from correctly predicting that a mid-tier candidate is about to have a phenomenal month of media coverage.
And that causes their contract to reprice.
Exactly. You capture the narrative shift, you sell the contract to someone else at the new higher price, and you just walk away.
That reframes the entire board. I mean, if Rubio is the blue-chip growth stocks making steady, calculated gains, there must be penny stocks on the board too, right?
Oh, absolutely. There's a totally different strategy playing out at the bottom of the board.
With the single-digit candidates.
Yeah. You have Ron DeSantis sitting at 2.85 cents. Vivek Ramaswamy is at 1.25 cents.
And Glenn Youngkin is at 1.35 cents. Though, Fox News reported Youngkin actually endorsed Vance back in January.
Right, which explains why traders have priced him out of the top tier. He's likely just positioning for a cabinet role. But DeSantis and Ramaswamy, They represent a completely different trading vehicle.
They're the cheap contracts with massive upside potential.
They are the ultimate asymmetric bets. Taking a position on them requires a completely different mindset. You're focusing on extreme volatility rather than steady growth.
Right, like look at the conflicting signals around DeSantis. CNN recently reported he's found a second act as a Trump ally, kind of moving past the friction of their 2024 primary battles.
And Laura Loomer reported an imminent, splashy June 11th announcement scheduled at the Fillmore Hotel in Miami Beach.
But the analysis also points out a glaring structural flaw for DeSantis. His actual political operation right now is described as virtually non-existent.
Yeah, donors are incredibly hesitant to back him this early. They don't want to alienate J.D. Vance and the current administration.
Which is why his contract is sitting under 3 cents.
But traders look at that price and see massive opportunity.
Because if he steps onto that stage at the Fillmore Hotel and announces, say, a massive super pate,
The media will swarm. That 2.85-cent contract could jump to 6 cents in an afternoon.
it's the exact same psychology as venture capital investing.
Yes, perfectly said.
You put small amounts of capital into a dozen highly volatile, cheap startups. You know full well that most of them will fail or just stay flat at 2 cents. But if one hits like that Fillmore Hotel announcement, a 2-cent contract doubling to 4 cents becomes a 500% gain at 5x leverage.
Exactly. And that single hit easily covers the microscopic losses from the candidates who didn't move. You are hunting for explosive upside where the downside is strictly limited.
Because the contract is already near the floor, it can't really drop much lower than a penny.
Right. And Vivek Ramaswamy is the perfect embodiment of that dark horse thesis.
Oh, yeah. He just won the May 2026 Ohio GOP gubernatorial primary.
And the New York Times listed him, alongside Byron Donalds, as a 2028 prospect who can make a quick leap to the national stage.
I mean, the prevailing theory among political critics is that the Ohio governorship is merely a staging ground for him, right?
Oh, yeah. It's a consolation prize to keep him in the headlines while he builds infrastructure for a presidential run.
And his contract is sitting at just 1.25 cents if he pivots from the Ohio governorship to 2028 positioning.
His contract could quadruple. The risk-to-reward ratio is incredibly skewed in the trader's favor there.
Okay, so logically, this brings up a huge question. If we know how to spot a rising star, or at least an asymmetric bet, how do the markets spot a fake one?
Oh, this raises an important question. How do you avoid getting trapped in a narrative mirage?
Exactly. Let's look at Donald Trump Jr. He is currently trading at 2.25 cents. But not long ago, he was soaring at 35 cents.
It was an absolute collapse in value.
And meanwhile, the former president himself, Donald Trump, is sitting at 2.05 cents. We also have this cluster of candidates the analysis calls pure noise. Tulsi Gabbard at 0.95 cents, Rand Paul at 0.95 cents, Nikki Haley at 0.85 cents.
The rise and fall of Don Jr. is literally a masterclass in separating signal from noise.
Tell us about the wedding.
Right, so he married Bettina Anderson, and the wedding generated wall-to-wall, inescapable media coverage. He was the most talked-about figure on social media for weeks.
And Newsweek even reported that traditional sportsbooks saw massive bets on Don Jr. for 2028, right?
Yeah, his implied odds went through the roof on those platforms.
But Polymarket and Predmart completely faded the hype. They looked at the exact same news cycle and actively drove his price into the ground.
Because a leveraged trader on Polymarket doesn't just ignore a bad bet, they actively profit from it by shorting the candidate.
Oh, right, because you can buy no shares.
Exactly. You literally purchase a contract that pays out if Don Jr. does not win the nomination.
So the divergence between the sportsbooks and the prediction markets kind of exposes who is actually placing the bets.
100%. The sportsbooks are flooded with what we call dumb money.
Casual bettors.
Right. People scrolling their news feeds, seeing a celebrity wedding photo, and throwing $50 on a recognizable name. But the prediction markets are dominated by smart money.
Leveraged traders who understand that dominating a news cycle with a wedding does not translate into a political ground game.
Exactly. Don Jr. has no campaign staff in early primary states, no distinct donor network separate from his father's, no policy platform. The smart money recognized that lack of infrastructure and aggressively bought no shares.
They successfully predicted that once the wedding magazines moved on, his price would just crash.
Yep.
I want you listening to really imagine the discipline that requires. You see a famous name flooding the news cycle. Your friends are talking about it. Odds makers are slashing his odds because of a betting frenzy. And you have to look at that, recognize it's just celebrity noise, and actively bet against them.
It requires an incredible amount of emotional detachment. You have to trust the mechanics over the spectacle.
And we see that same mechanical detachment with Donald Trump's 2.05-cent contract, don't we?
We do. I mean, the market is fully aware that he is constitutionally term limited. He cannot seek a third term.
So that 2-cent price tag is not pricing in a traditional campaign launch.
Not at all. It is purely a tail risk position.
Basically buying incredibly cheap insurance policies against extreme scenarios.
Yes, they are pricing in the microscopic probability of a complex 25th Amendment scenario or some unprecedented succession issue.
And the same logic applies to those noise candidates we mentioned.
Right. Tulsi Gabbard, Rand Paul, Nikki Haley, they're under a penny because they possess undeniable structural ceilings. Gabbard has a Democratic voting record the base won't ignore. Paul is in a very narrow libertarian lane. Haley permanently alienated a massive faction of the base in 2024.
So the market evaluates those realities and concludes that no amount of positive media coverage can overcome that math.
Exactly. It's structural.
Okay, so having the right thesis is crucial. Knowing Rubio has real momentum or that Don Jr. is a mirage, but that doesn't matter if your timing is wrong.
Timing is everything in leverage trading.
So what does this all mean? When do these leverage traders actually strike?
If we connect this to the bigger picture, they operate on a strict calendar of known event windows. The first major one is November 3rd, 2026.
The midterms.
Right. There are 22 Republican Senate seats up.
But the traders aren't betting on those individual Senate seats in this market, are they?
No, they are treating the aggregate result of the midterms as a direct referendum on the Trump administration.
Got it. So a strong showing by the GOP reinforces the current path, which helps Vance.
Exactly. But a disappointing midterm result blows the doors off the hinges. It creates this sudden, massive demand for a course correction.
Which skyrockets the value of alternative candidates like Rubio or DeSantis.
Yep. And right after those midterms, we hit that late 2026 window where Vance and Usha make their final decision. That is a binary event.
If he officially announces, the field compresses and the penny stocks drop to zero.
But if he declines, which is unlikely but possible, every second-tier candidate reprices violently upward in minutes.
And then moving into the actual election year, we have the Iowa caucuses in February 2028, Super Tuesday on March 7th, and the RNC in Houston in August.
But here's the golden rule of position sizing for political catalysts. You don't trade the event, you trade the anticipation of the event.
So if you wait until the morning after the November midterms to buy Marco Rubio because the Republicans had a bad night,
you're way too late. The smart money started building their leveraged positions on Rubio back in September.
Ah, I see. They accumulate contracts while they're cheap, anticipating that October polling will show weakness.
Exactly. By the time the actual election night results are broadcast on television, the price has already factored in the outcome. The smart money is selling to the dumb money, who are just reacting to the news.
You capture the repricing of the narrative before the narrative crystallizes into fact.
Right. And that same logic applies to exiting the market entirely. You do not hold your J.D. Vance contract all the way to August 2028 at the Toyota Center to watch him accept the nomination.
Holding a leveraged position that long is financial suicide.
It really is. Professional traders close out their positions well before Super Tuesday in March. By February, the winner is usually obvious. The leading contract might be at 90 cents.
And trying to capture that remaining 10 cents of upside is mathematically meaningless compared to the risk.
Right, the risk of a sudden scandal breaking in April that wipes out your whole position. You take your amplified gains, liquidate, and step away before the final math locks in.
Wow. We have really unpacked an incredibly complex ecosystem today. We've looked at a falling frontrunner with Vance, a surging challenger in Rubio. We explored those asymmetrical penny stock bets like Ramaswamy and DeSantis.
And the mirage of celebrity noise with Don Jr.
Right. And the key to it all is understanding how platforms like Predmart allow traders to apply up to 5x margin to amplify these narrative shifts into massive returns.
It fundamentally changes how you view the political news cycle.
It really does. Because for you, the listener, the real lesson here extends way beyond the 2028 primary. It's about how you critically evaluate information. When a breaking news alert hits your phone, are you reacting to a wedding photo? which is just noise? Or are you looking at a White House press briefing, which is actual substance?
Developing the discipline to fade the noise is basically a superpower now.
I want to leave you with a final puzzle to chew on. We started this deep dive noting how prediction markets are proving far more accurate and responsive than traditional polling. So if these decentralized platforms consistently outperform the focus groups, how long will it be until the political campaigns themselves stop paying for pollsters?
That's a great question.
Right. How long until they start letting the leveraged traders dictate their campaign strategies? It makes you wonder who's actually leading the dance, the politicians creating the news, or the traders pricing it in. Keep questioning the consensus, keep looking past the noise, and keep your eyes on the seismograph.